So what is cash on cash return? Why is it important to you as a real estate investor? And how can you have this analysis help you buy your next deal?
Welcome to our second part of our 5-part series where we're going to analyze cash on cash return today. Before we do that, Colin's our local real estate agent here in Utah, and I'm a financial planner who works with a lot of real estate investors.
Cool, thanks Sam. So yeah, we're analyzing the cash on cash return. Simply put, what a cash on cash return is, it's going to analyze your stream of income after your expenses and other things based on the cash that you invested, instead of where cap rate analyzes that stream of income based simply on the whole purchase price or value of the property. But because you can finance real estate, cash on cash return becomes extremely important for those looking for good financing on real estate.
Yep. So let's jump in to this investment. Where do these numbers come from?
Yeah, so again, we're analyzing one of my properties. I use a strategy that we're going to talk about later.
In video 5 of our 5-part series.
In our bonus series, but we're going to analyze this property just to illustrate these returns based off of a traditional investor putting a 20% down loan, yep. Which is kind of your common way of buying a rental property. Yep. So we'll break it down.
Yeah, so it starts with cash flow. What is the cash flow on this property? Yeah,
so we analyzed this beforehand, just so we don't have to spend the whole video breaking down this number. But it's annually at $985.
And how do we get to that number?
Yeah, so I'm getting to that number by we're taking out all of the capital expenditures. We're taking out
so all your expenses.
Yeah, so like budgeting again for the water heater, the furnace, the carpet, the paint that you're doing every once in a while. And then we're also, this one is also going to include taking out your mortgage. So that's kind of the key difference is your principal, your interest, your taxes, your insurance, even your HOA. We're going to take that out. And that's what we're getting to is $984 annually.
Awesome. And what was the cost on this property?
So on if a traditional investor were to take this and get 20% down, with about $5,000 in closing costs, which is pretty normal, they'd be in $57,380.
Awesome.
And when you take $984 divided by our costs, we calculated out a cash on cash return at 1.72%.
Okay, so tell me when you're looking at a property, why is that number important? Like I know we talked about it, but what does that mean?
Well, it depends on your goals as an investor, right? So there's a lot of investors where their whole goal is to be a full-time real estate investor. They just want income properties. This is not the property for you, right? Like if you're looking at a 1.72% cash on cash return, you're gonna need something where you need to put way less money in the deal and cash flow way higher. That's ultimately gonna help you cash flow more per month and get out of your job quicker, if that's your goal.
Yep.
Now, I will say this, not all cash flowing properties have the highest annualized rate of return. Like, I'm not an idiot, right? Like, I'm not gonna go buy 1.72% rate of return and manage tenants and have a headache and make almost no money where I could have bought a bond or throw my money in a money market. So my goal, I like what I do. I like helping people buy and sell homes. I don't need the income. And so I buy for a different reason, and so I look at more things than this cash on cash return.
Yeah. But it is important to look at, especially when you are analyzing deals. It's just another one of those sifters to say, okay, what is my cash on cash return? What am I getting on this property compared to this property? Absolutely.
And I will say this, when you analyze cash on cash return, you can be really creative as an investor. You can increase this number substantially by getting your costs down, right? Like if you can find ways to put less money into a property, you're gonna increase your cash on cash return a ton. And if you can find ways to increase your cash flow per month, yep, then you're also gonna increase your cash on cash return a ton.
Yeah, we're gonna show you exactly how to do that in video 5 of this 5-part video series. But this is again just an example today of how you calculate cash on cash return.
Thanks for tuning in today, guys.